And Rachel, would you mind arrowing down for me, please? Excellent. So I would just like to start by giving folks a little bit of an overview about the Micro Business Development Program before I introduce today's guest speakers. The Micro Business Development Program was started back in 1988, and it is a statewide program that works with low to moderate income Vermonters to help them start or expand a business. There's no fee for our services as long as folks qualify, which is based on the number of people in the household versus the household's total income. And again, we are a statewide program, so there is a contact for your region. And so depending on what county you live in, there will be a specific micro business development program counselor for you to connect with. Great. So we've got those regional contacts here for you. Brock, which is down in the Bennington, Rutland area. Adam is the contact there. Capstone Community Action. I think I saw Margaret Ferguson on today's class, so thank you, Margaret, for joining us. She's a contact down at Capstone if you live in Washington, Lamoille, East or West Orange counties. Myself, Simeon Geigel with CVOEO, Addison, Chittenden, Franklin, and Grand Isle. Up in the Northeast Kingdom area, covering Caledonia, Essex, and Orleans, there's Alex Wheeler. And finally, down in the Sevka, Southern Vermont area, covering Wyndham and Windsor, is Glenn Oland. So if you're interested in getting free business development help, and need help putting together a business plan, looking to access financing and need some guidance around that, we're available to help with that, whether you're a startup or an existing business. So I'd like to introduce you all to our guest speakers today. So they have the most time to describe to you what they do and to answer your questions. We have Ben Green from the Vermont Community Loan Fund with us today, and he is a business advisor with that organization. Emma Enoch is a business loan officer with the Vermont Community Loan Fund. We have Laz Manrique. He is a loan officer with the Opportunities Credit Union. And finally, Abby Solomon, a loan officer with the Community Capital of Vermont. And I'm really excited to have these guest presenters on today, and specifically from these organizations. I think it's important that people in the community know and understand that there are some very excellent Vermont-based small business lenders. And these are folks definitely in the community that have been servicing Vermont for a very long time. And I'm really interested to learn and share with you what makes them different, unique, and what the benefits are of working with them. So that information that I just reviewed with you in the introduction will be sent out to you, so you will have the contact information there in case you would like to make contact with any of the business counselors at the Micro Business Development Program or follow up with any one of the guest presenters. So I will go ahead and turn it over to Abby Solomon with Community Capital of Vermont to kick us off.
Good morning. I'm Abby Solomon. I'm the loan officer at Community Capital. We're a mission-driven micro business lender in Vermont. We lend to all types of businesses across the state, but we're CDFI, so we're focused on low to moderate income individuals who are having difficulty finding capital through traditional means. As a micro lender, our loans are between 1,000 to 100,000. Pre-COVID, our average loans are around 30 to 40. That's kind of our sweet spot. The larger side of those loans, the 100,000, generally are a little bit more difficult to get through our loan committees. They require stronger collateral, and generally that side is for established borrowers already, but we are really open to discussing any loans. And we also offer, so that's the term, we offer term loans. We also offer lines of credit, that's up to 50,000. And those are used by many businesses that are especially seasonal. It's very helpful with seasonal businesses, but that, excuse my dog, manufacturing and that type of cash flow. So we're really open to working with people who may have some credit challenges, startups, of course. That's really probably the majority of our portfolio is startups, because banks aren't as open to funding startups. And then the other difficulty micro businesses find is just the small amount that they need. A bank isn't necessarily going to lend that. So we're really comfortable in lending that smaller amount, and we're here to help at any stage of a business. So that's kind of an introduction. I will pass it on to whoever's next.
Let's see. Laz, do you mind taking the reins?
Sure, how are you? Thank you for having me, everyone. I'm Laz Manrique from Opportunities Credit Union. We're located in Vermont. We have two branches, one located in Burlington on North Ave, the other in Winooski along the Cascade Falls there. I've been with the credit union for 6 years now. Opportunities started in the late 80s with the idea that everybody should be bankable. Thankfully, I'm part of that mission focus today after 6 years being with the organization. We're only Vermont-based. I do receive calls sometimes out of state, but we are Vermont-based lenders. Our mission focused, yes, we also are a community development financial institution, or CDFI, where we focus on certain different levels of economic standards, but mostly the idea is that we have a creative side. I like to describe myself as a creative lender out in the field, being a lender for 20 years and the past 6 years being with Opportunities. I've been able to work on a lot of creative projects, and I'll go into that a little bit. The consumer side, we're a credit union that offers, as you could think of it, all various products, consumer products, business products, just like you would think of any credit union or banking institution, or technology, web-based, mobile banking. We do have all, but yet we operate in a very specific mission-focused, community-based operation model. And what that is that I do work with a lot of startups. I work with existing businesses. My range of lending is from 1,000 up to 750,000. Asset-based lending, which is mostly the focus on, we do first position, or basically as if someone were to call me and says, I have a piece of equipment, I'd like to finance a vehicle, purchase a real estate, a business. We'll look at those assets and determine the value, but we do take first position on mostly all the things that we do here in the state of Vermont. But we also work with other organizations like VITA, the SBA, Community Capital, various organizations that have come to us trying to put projects together. So I like to always describe myself in the creative space that way. So asset purchases, working capital, lines of credit is primarily the space I operate in. Before COVID, certainly, you could certainly visit our website. We have a proud, I like to describe it as member moments. We've certainly been proudly financing many businesses in the area, retail, restaurants, new businesses, breweries, daycare centers, all different types of businesses proudly throughout the state of Vermont. And then COVID came along and changed that focus. I'm proud to say that we continue to lend, we continue to focus on doing due diligence and what we do. We continue to welcome all referrals. I certainly receive calls daily when folks are looking to start businesses, or those who are between the first year and 5 years worth of business. But overall, I'd like to leave the audience at least with this notion is that if someone was to call me, it's usually on the creative side, says, Laz, I've got a couple of different pieces. I'm not sure how to put this together. And it begins there. That's where the magic happens. I work on projects that usually take about 2 weeks, sometimes on the cycle, to up to 2 years, believe it or not, with some of my clients. So thank you for having me today. I'll pass it along.
Thank you, Les. Appreciate it. Ben, Emma from Vermont Community Loan Fund. Would one of you like to kick it off?
Yeah, definitely.
Great, thanks, Ben.
So I am Ben Green. I'm as Simeon mentioned, a business advisor over at Vermont Community Loan Fund, just one half of the group here. Vermont Community Loan Fund is similar to some of the other organizations on here. Also a CDFI, which stands for Community Development Financial Institution. So part of that is we're kind of a like others have said, a mission-driven organization with the intention of providing financing to businesses and organizations that might have a harder time accessing traditional finance markets or working with bigger financial institutions. Our organization was started in 1986, and we are based out of Montpelier, but work with businesses throughout the entire state. We provide loans, lines of credit, and then business advisory services to whatever, a local business, community organizations, nonprofits, any early childcare and learning organizations. So we kind of run the gamut. We try to invest a lot of times in individuals, like I said, that might have a harder time kind of accessing traditional lenders. So a lot of the times that's people that might not have as much collateral or physical assets to qualify for a normal loan. They might have a subprime credit score, which we're happy to kind of work with and explore with applicants in general. And then what I kind of focus on a lot of the time with borrowers, whether it's in the pre-loan phase, while they actually have a loan with us, or even after they're done paying off loans, is I'll provide assistance, or our business advisors will provide assistance around any financial management issues your business might be facing, or any operational issues your business might be facing. And we're kind of happy to come up with creative solutions, provide maybe templates for certain financial statements that you might want to hone in on a little bit more or flush out a bit more. But yeah, we kind of offer an array of services to help our businesses get out in front of issues and kind of achieve whatever success the business owner themselves are trying to achieve.
Thank you, Ben. Appreciate that. Emma, would you like to say anything at this point?
Ben really covered it. I guess I could just say that our maximum first-time borrower limit is $350,000. We go as low as $1,000. Unsecured, we are a collateral-based lender as well, and there's a lot of art and science to that, as Laz mentioned. We do go up to $10,000 for an unsecured loan. Otherwise, we do look for collateral. But yeah, Ben really covered it. So
great. Thank you, Emma. I appreciate that. So I realize for many of you, you might be introduced to terminology that you are not used to. And this is an opportunity for you to gain a better understanding of terminology as well as process. So if you don't understand or recognize a word or what it means, I'd like to encourage you to either ask, or there is a chat box feature in Zoom. You could certainly type in your question and we will attempt to address it. So thank you, all of you, for introducing your organizations. I know that there's certainly more to know and questions out there. So why don't we open it up to questions at this point? I mean, I know I've got a few, but I don't want to jump the gun on anybody. So you can either ask your question by just raising your hand in the chat function, or you can just go ahead and shout it out. So who has the first question? All right. Well, I know that many.
I'm sorry.
No. Marty,
I was looking for my unmute button here.
That's okay.
First of all, thank you, Simeon, for putting this on. It's as a potential, yet again, small business owner, I greatly appreciate the resources and as well as everybody that's attended. I'm going to give you just a quick overview. I've got 30 years of business experience, serial entrepreneur at various levels, but I've been working for corporate America for the last 5 years. Going back into a business venture where I'm trying to make a decision right now as to whether I'm going to purchase a franchise or develop my own business model. So one of the questions I have right now for the lenders that are in this forum are that, number one, does that make a difference in your lending approach? And number two, I'm hearing the terminology traditional vendor versus, I'm just going to use Ben because you're the only one with the complete title, the Vermont Community Loan Fund. So are your funds historically, just broad strokes, at higher interest rates, or I'm trying to determine where your value lies? Are you funded through other sources, or are they guaranteed by other sources? Does any of this make any sense?
Yes, it does, Marty. It's a great question. Thank you. Who would like to address that first?
I can jump in. So to address the franchise versus independent first, our organization, we don't not lend to a franchise, but it really has to be, like, if you're buying into a Subway, that's something we can't do. If it's a very small Vermont franchise, we might be able to work with you. But again, so I work with clients from inquiry stage all the way through closing. So that can be discussed like ahead of time before you put the effort in to apply for a loan or anything like that. And that goes back to what our focus is as a mission lender. And a franchise isn't always necessarily within our mission. And then funding, yes, our loans are at a higher interest rate. Right now, they're between 8 and 10.5%, up to 6 years. So they're a lot shorter. But that is because we're taking the risks that banks aren't taking. So we need to offset that risk a little bit. We have no prepayment penalties though. So if you either become bankable and can get a loan through a bank at a better rate and can pay us off, or you just are doing awesome and can pay us off early, then that's a success for us. Part of our gauging of our success is if a business becomes bankable. That's really part of our mission. But there's other advantages to us, even though there is that higher interest rate. This last year, some of our funding comes from the SBA. We're a micro lender, so we're not the 504 or 7A where they have that guarantee. That's not part of what we do. But because of the CARES and all the different acts, we were able to really help out a lot of our businesses, specifically our SBA businesses this last year, because payments were made for them. And that, some of our older businesses had up to, I think, almost 12 months of payments made by the SBA for them. So we don't hope for anything to happen like this ever again, but there is that possibility and benefit there. But then we also have a business advisory service. It's mainly for current borrowers. We do kind of turn towards business advisors like Simeon or the SBDC for pre-loan. And that really does help a lot of our borrowers. And we have some very small dollar grant money available for current borrowers to buy equipment, possibly pay some bills, things like that. So there's other advantages to being part of our portfolio, even though the rates are a bit more. I think is that, did I answer all your questions? I mean, I can't speak for the other organizations, but that's what we can
Yes.
offer.
Absolutely. Thank you, Abby.
Quick question, Abby. I think you mentioned a interest rate range. I might have missed it.
Yep. So currently it's between 8 and 10.5%, and it's anywhere from, well, we can go really short term up to 6 years on terms. And that's the same for our term loans and our lines of credit.
Thank you.
Marty,
Yes.
I just want to chime in on behalf of the credit union, just to expand a little more on that. So if you think of the credit union and franchise, it's not a space that we occupy. But if you were to come to us and say, I'm looking to purchase a small sandwich shop, for example, locally here in the state of Vermont, certainly that's a project that would certainly be a focus of ours. And it would be the questions that would take place during that would be certainly, what is your experience? What is your background? You know, where's the location? Is it an existing? Are you going to be purchasing the equipment? What are you going to be changing the menu? I mean, there's a variety of, and I don't really want to get into specifics, but there's so many different questions that go into with the purchasing a business. But on something like that, we occupy, to products and rates, we occupy, I like to split this in two spaces. So if it's a situation in which it's an asset that's to be purchased where there's equipment, and let's just even say you were purchasing the building where the sandwich shop is. Well, we have a competitive space on the rate side where we operate in the everywhere in the ranges and between the 4% and 5% space, mostly on a lot of the different products that we're looking or we currently finance. Now, in that case, you're purchasing an existing business and it's not a franchise. Okay, we'll take a look at its assets. We'll take a look at its cash flow. We'll also take a look at yourself and like to collect some of your financials. But we can operate in a space where we're competitive like that. Now, if you came to me and said, well, I'm looking to start a business here and it's brand new. And, you know, let's say the funding's 50,000, let's just say small amount. But I don't have much collateral. Well, there are spaces that we do occupy as well in the 50,000 under space where the rates are a little higher, 6, 7, 8%, nothing in the double digit. But in that space, we'll take a look at see what community type project are you working on? Is it creating jobs? What are you looking to impact the community? And we'll really look at the project deeply and say, okay, perhaps maybe there's a collateral shortfall, but let's creatively see what we could do with some of our funding sources. And our funding sources are very deep. We have, please check us out, but we have everything from our Goldman Fund, our Gardner funds. These are funds that were started over decades ago that have been funded privately, and then through institutional investment and other partnerships, we've been able to grow our position very well, that we be able to lend in a space where there's a little bit of a challenge credit-wise or collateral-wise, but then if you said, hey, I've got a project here where there's real estate, real assets, real cash flow, well, we can operate in that competitive space as well. So I'd like to end there, but I really just wanted to leave you with that thought. If you call the credit union, we have a creative side and a community impact side. And we can work with the SBA, we can work with VITA, and we can put complex projects together for you. Thank you.
Thank you.
Thank you.
Ben, Emma, would you like to address Marty's question?
Emma, I'm having a hard time hearing you. I don't know if anybody else is in that same
Correct.
boat.
You appear to be muted, but it didn't state muted on the screen.
Can you
There you go.
Yeah.
Maybe just lean into the microphone. There we
A
go.
little
Okay.
quiet for some reason.
Sometimes when I switch between Zoom and Teams, my microphone, it gets confused. So as I was mentioning, we also don't not lend to franchises. It's really just, it all comes back down to mission-based, what type of business you're getting into. As Laz mentioned, is it creating jobs? Is it retaining jobs? Is it sourcing local resources to Vermont, whether that's lumber or food, anything like that. In terms of our rate ranges for business, averages about 6.25 to 7.5% right now. We have various funding sources. So depending on what type of business you are, the interest rate can fluctuate a little bit. If you're a food farm or forest business owner, the interest rate is a little lower because we have people who invest in VCLF into these different programs that can sort of subsidize an interest rate. So we can make it a little lower for you depending on the type of business that you are.
Thank you.
Yeah.
Great, thank you. So we had someone come in with a question here. And so the question is, what kind of projections do you require for a startup online business? Is all community lending based around local impact specifically?
Go ahead.
Ben? No, Ben, you go.
All right. In terms of projections, Vermont Community Loan Fund usually looks for about at least 1 year's worth of projections through a cash flow statement, which for those of you not particularly familiar with the cash flow statement, it's basically a summary of all the money that's coming in and out of your business. You can use it as a backwards looking tool, but you can also look at it as a forward looking tool. And what we're usually trying to get out of that is just how a company is going to be generating their own cash, and then how they're going to be able to pay off their debts, as well as maybe pay their owner and any employees that they might be having. So usually we look for about a year's worth of projections. And again, this is something that our advisory services would be happy to help an applicant kind of work on and put together if they're not particularly familiar or comfortable building out one of those statements. In terms of is all community lending based around local impact specifically? Not necessarily. I mean, usually we are looking for jobs created, or the type of business owner that we might be financing, making sure that money's going to the places where it should be going, type thing. But at the end of the day, if there is just a particular business who does want to work with us rather than going down other avenues, I think VCLF at least is always happy to have a talk with those individuals and try and figure out with you what the best means of moving forward might be.
Thank you, Ben. That's a good question. I'm sure that also parlays into, if you're requesting a business plan, usually financials go with the business plan. But specifically for that projection question, Abby, Laz, are you able to chime in on what you require for that?
Yes, for the credit union, slightly more aggressive, a 3-year on the projections. In terms of those projections, income and expenses, the idea is that while we don't have a counseling arm that supports the business side, in other words, that an advisory side will work, if folks were to come to me in terms of putting these projections together, the idea is that does the individual have the aptitude and the in-depth understanding of what they're presenting to me? So Did that individual work with a consultant? Did they work with the small business development centers? Did they work with CVOEO? Who did they work with? And that's usually where most of the Q&A starts with when someone is calling a credit union, particularly myself, is do you have projections? So those 3 year, I'm really looking for a 3 year, and it's not driven at any specific dollar amount either. Well, Laz, it's only a $50,000 project, 3 years. And Laz, it's 500,000, 3 years. It really comes down to that being for that individual to have do they have an in-depth understanding of what they're providing me? And I have to tell you, and a lot of the entrepreneurs I work with, it's fantastic. It's really great to work with local folks that when they come to me, they do, well, I've worked with the SBDC and they are heavily driven in understanding what their financials are. And the idea is that, are they presenting projections that are realistic? And are those projections in line with the current business models of other competing industry? We happen to finance several, I like to say, eateries or institutions that many of us enjoy to go out to eat and say, well, how do you fund a business like this? Well, the individual sometimes, it's not someone who is an accountant who decides to become an owner of a restaurant. Folks that are coming to us have an in-depth understanding. They're great cooks. They really have a good, but do they have an understanding of their financials? Can they project? Do they understand amortize their payments and understand how to cash flow appropriately? And what are the values that we're looking for? Well, I'm pledging this piece of equipment. Again, that dialogue is usually already taking place by the time someone gets to me. In terms of community impact, it's not necessarily, it is open-ended, it's Vermont-based, but it really comes down to, it's a case-by-case basis with every single individual that I work with or groups that I work with, case by case. So it's a matter of listening to what is the business plan, what's the character, do they understand the cash flow, and most importantly, the capacity to pay back. Does the individual understand, while they're putting a request in front of us, do they have the ability to pay it back? And it's up to us to be responsible lenders and saying, do they have the ability to do so? And I like to say, it's always important to have reserves, no matter what you're working on. And the idea is that when you come to anyone to say, well, I have a great idea. I've been a chef in the industry for such a long time, and I have such a passion. That's great. I love the passion. Let's work with you. We have funding there. We have funding sources, micro lending source. Now let's get into the nitty gritty. Do you understand the type of equipment? What are the assets that you're going to be? Well, I understand. I understand how many tables I need to have. What are the hours? How does COVID impact? So these are really all questions and Q&A that comes out of that projection discussion. So 3 years, a little aggressive, but the hope is that the person understands. And if they don't, it's not a pushback. It's not a no. It's when we're going to be able to lend to that individual or group. So thank you.
So at Community Capital, depending on how much you're applying for, if it's 5,000 or below, we require 1 year. Above that, it's 2 years of cash flow projections. And just to add to what was just said, it's really, cash flow projections are daunting when a business owner, especially someone who's never done them before, approaches them. That's really, a business plan is a lot too, but it seems the cash flow projections are the thing that stumbles people the most. And as lenders, we understand that they're projections. So, there's no way to know 100%. But that's where you need to educate yourself and understand the market, and then what possible expenses you are going to have moving forward to make really educated cash flow projections. Because we're going to, unless it's pretty blatantly clear, we're going to be coming back and asking you, how did you get these numbers? And how much your electric costs and how much your internet costs. That's pretty basic, and those numbers. But why are you making $5,000 next month? You need to know, a restaurant is always the easiest example, that, you're going to be feeding 20 people every day and their ticket's going to be $10 a time. And this is why you think it's going to be that much, and those type of things. So just be ready to answer those questions. Make sure that you're making educated projections. And the business advisors out there are there to help you. They have sources to look at comparables and in the industry and in your area and all those things. So there's a lot of resources out there that can help you come to very educated projections. So the other thing, what I look at, and of course basically it's, can you pay the loan back is what we're looking at projections for. But it's also, do you need the money? Because we don't want to lend to you and give you money that, first off, you're not going to need, and you're going to have this additional debt. And I know that sounds ridiculous because you think you're going to a lender, you feel you need the money. But when you do your cash flow projections, there is a good chance that you can see that, if I'm doing these correctly, the projections, there is a good chance that, I might be struggling for 2 months, but then I'm going to be on top of my things and I won't have this additional debt there. So that's happened. I haven't gotten to an underwriting stage with someone like that, but I've connected someone with a free business advisor and never heard from them again, and connected with that advisor at some point just to get an idea if that person might be coming back to me. And they're like, you know what, we looked at everything and they don't need money. So so that's, when you're starting a business, it's a great tool to use for those reasons.
Just to reiterate one thing that Laz had mentioned, which is true for this question, but probably true for every question I'll end up answering. Every business is almost always going to be on a case-by-case basis. So while all three organizations here, I'm sure, can give you kind of general good over guidelines in terms of what we might be requiring or looking for, at the end of the day, it's going to require us hopping on a phone call with you and kind of talking through your business and your goal and yeah, just getting a much better understanding for where you're at individually, and then also where you're hoping to go with your business.
So I have a history. I'm sorry, go ahead. I don't want to
I just noticed that Harry had his hand up, Marty. So can I jump to him and come back to you?
Absolutely.
Oh, great. Thanks so much. I appreciate it. Harry?
Can't hear you, Harry.
Harry, we can't hear you. If you type your question into the chat, I can let them know. Thank you. Marty, you in the meantime, you want to go?
Sure. I think, as you all realize by now, I'm not shy. So if you need to rein me in, Simeon, you absolutely feel free.
All right. Thanks for the permission.
And I apologize if I'm stepping on anybody's toes in this forum. With that said, I have a history, and it's not all about me, but I have a history of small business ownership over the last 30 years. Some I hit it out of the park. Some, let's just say, there were some learning experiences along the way, to put it gracefully. With that said, I have done a lot of standalone sole proprietor work. So I am very in tune and intuitive with projections, costs, what I need to meet my quotas, margins, et cetera, et cetera. However, I need work on, at times I've had an accountant. So it's like, okay, I'll try to set up QuickBooks. The language of accounting escapes me. That's very, very honest. The language of lending, I am not very deeply entrenched with. Are there any community resources out there, with the exception of enrolling in a college course or an online course for small business accounting, that can help navigate these processes or give this potential small business owner an education?
Well, I don't mind jumping in here for a quick second, and of course, all the presenters can as well. Marty, I think that our area, when I say our area, I'm specifically referring to the area that I cover in Burlington. There's a number of business development resources, and I failed to mention that at the beginning. I meant to, but they will be identified in the list that we're sending out. So there's the SBDC, SCORE, Center for Women in Enterprise. They also work with men. Our organization, I think you'll find that there's a lot of resources available through those places. I don't know if you've tried them in the past already. So they offer good one-on-one as well as classes. So you would not be enrolling in a college course. But I would certainly encourage you to look at those resources. They have classes as well that have been recorded, and you can access them. I think if you're referring to, is there some kind of organization that has like a bookkeeper or an accountant like to kind of do that work, then I would say no. But there are those resources that do offer the help and the guidance. I would also say a lot of folks I work with struggle with that, and very often their best bet is to simply work with and turn that side over to somebody that can do it consistently and it gets done well. I don't know if that answers your question sufficiently,
Well,
but we can turn it over to the others for input as well.
I think it does. I mean, one of the reasons why I reached out is because I guess I want to feel validated that I'm not alone with this.
You are not alone.
Okay. So I'm looking for a little emotional hug on both sides of the good. But with that said, yeah, it's been one of those complexities to me where it's just like, okay, here's my question to my bookkeeper. Please give me my answer. That's what I hire you for. But being 55 years old, and I feel like I'm in the last third of my life, and what I'm developing now is geared towards the last third of my life, that's an area that I need to fill out my educational skill set to become more complete as a business owner. So
I can plug one of the services that we have real quick. So our business advisor, David Parker, is a certified QuickBooks trainer. And before COVID, he regularly teaches classes across the state. We've done a few at CVOEO. We've done a few at Capstone, all over the place. They are free classes to anyone. They're not focused on our borrowers. They do fill up quick because there's only about 14 seats. We have not figured out how to do them remotely yet. And we've started discussing doing them in person. That's kind of quieted down again, but hopefully next spring we'll be doing those classes again. And the first half of the day is like really preliminary, how to sign into QuickBooks, what the icons mean and things like that. And then in the afternoon, it's a little bit more intensive of actually like entering things and figuring that out. It's a really good base class. If you some business owners have bookkeepers, and as Simeon said, I truly suggest that if that is something that you're not as strong on, but still having a understanding of the program is really useful, especially if you need to go in when your bookkeeper isn't available to print a report, or if you can enter some of the information, then you won't have to pay your bookkeeper for as many hours, types of things. So just keep look. I'm sure when we start doing them again, we'll have one at CVOEO, and they're really great and useful. And David is really good at those classes.
Hey, Marty, I also wanted to kind of consider myself a resource. A lot of an important part of what I run JPX, the social equity consulting firm, and we're actively working on a project to kind of centralize all of the resources that exist within. Right now, the focus is on Burlington, the Winooski area, and we're looking to expand. But the goal of it is to help all organizations such as the ones represented on this call to uplift all of our missions together. We're all after kind of overall community development. And so one piece of that project to start is composing this sort of like navigation resource. So I've kind of part of my day work is my day-to-day work is having conversations with folks from like the Small Business Development Center and SCORE and other resources in the community that specifically address what you're mentioning. So I can send you my email through the chat, and I'm happy to be a resource.
I would welcome that, Juan. Thank you very much.
Thank you, Juan.
And I just got some great feedback from Margaret as well on the chat. Thank you, Margaret.
Ben, Emma, do you want to address that question, or do you feel it's been covered sufficiently, or your call? Oh,
Can't hear you.
Yeah, you can.
there you go. Faintly, it's faint.
Just need to
There you
turn on the throat a little bit. I feel like it has been answered fairly sufficiently. In terms of VCLF specific answer, we do offer pre-loan technical assistance. So just in terms of understanding the lender speak, we do have people on staff as well as loan officers who are more than happy to go through an application and sort of offer a better definition for certain terms that we're using. There does tend to be a bit of a veil that we are more than happy to just totally eliminate and just sit down and have a conversation with you about what we're truly asking for. So yeah.
Yeah, I'll also say, I'll second the recommendations for a lot of the local organizations that Simeon had listed off. And it sounds like Juan is kind of already taking the next step and aggregating all that information for the rest of us. So that sounds awesome, Juan. Personally, I a lot of times will also just go on Investopedia and spend a lot of time looking up terms that I might not be familiar with. So that's just a fun, good online resource that you can always use. And then one other thing that I'll mention, or two others, I guess. Members, one of in particular of our business advisors at VCLF, who's not on this call, is very familiar with QuickBooks and is always happy to work with individuals who are either trying to set up an account or even more likely maybe make a QuickBooks account or at least set up a bit more efficient, because my understanding is a lot of the time there can be redundancies and that end up just occurring over time, sort of thing. And then one last thing I'll mention, for a new product that VCLF is currently developing, one thing we're experimenting is basically including a glossary on our loan application to help define a lot of the terms on the application itself that people might not be familiar with. So if that is something that we get positive feedback on, I could very easily see us incorporating that across all of our applications.
Thank you, Ben. So I want to jump over to Harry's question here. So Harry asks, hi everyone, thanks for being here today. My wife and I started a CBD company based in Burlington last year, making topicals for pain relief. We are considering getting into the legal adult use of cannabis market next year. One of the biggest challenges with the cannabis industry is lack of access to traditional banking lending. Are there options for us with any of the lenders here today? Anybody want to lead that off?
So cannabis, no. We have some limited funding for CBD, but it's very limited, and we require some tests. We need proof that your product is legal, so it needs to be lab tested and all those types of things. We have found that we can't lend to farmers for growing CBD because technically the plant itself, it has too high of a THC level until it's processed. So we haven't been able to find a way to lend to CBD growers. But we have started that discussion about legal cannabis, recreational, and we, at this point, don't see any path to that because a lot of our funding is federal funding. And unfortunately, that kind of means we can't move forward because it's not legal in a federal state, unfortunately. If that changes, we will market it. but at this point, we don't see that changing by next year, unfortunately.
Laz, Ben, or Emma, you able to chime in on that?
Yeah, I'll start with, we don't know. That's an industry we just, not at this time. It's just as a classification and, well, our federal ties put it that way, but it's a question that I get almost every other week. I get calls on this regularly, but the credit union is not at this time. We'll see how the future holds for that one at this point. Thank you.
Thanks, Laz. Ben, Emma?
Unfortunately, our answer is really no different. We also rely on a lot of federal funds that restrict us from being able to offer loans specifically to cannabis. Can you all hear me?
Kind of, not really. Sorry, go ahead, Emma.
Basically, our answer is the same. We have a couple of borrowers who have CBD operations, though we didn't lend to them specifically for those operations. And we do have to use unrestricted funding sources for that. So it's a bit tricky for us as well.
Thank you. Sorry, Harry, that sounds like a disappointing response, but.
Can you guys hear me?
Yes.
Better? Okay. Yeah, honestly, I didn't expect to hear anything different. That's kind of, just because it's federally illegal, it's a huge issue. The state's talking about an equitable rollout. You got the city of Burlington talking about, giving priority to, disenfranchised groups and things like that. But the problem is the amount of capital you need to get into this business just is a huge restriction to anybody that really wants to get into the business. You really need to have a lot of money to be able to get into it. So really what's happening is it's going to be limited to people with deep pockets. That's what's going to end up happening, because not only do you need the capital to set up your, whatever you want to set up, but even real estate, you can't lease or get a mortgage on a place because banks don't want to deal with cannabis businesses. So you have to own the property outright, which again requires a lot of money, or you got to have a landlord that's got deep pockets that's willing to work with you. So I guess we'll see how things pan out, but it's a mess.
Thank you, Harry. That's interesting. And I've heard similar things as well. We'll just have to wait and see. Disappointing as an answer as that is. Any other questions that people have that they'd like to ask before I go into another bag? All right.
Yes, I would.
Okay, Pete, go ahead.
I sent it on the chat. Maybe it didn't get there. I've been in retail, and it's always been a problem for me finding lenders, but especially when someone is new and they have no history, they have maybe some inventory or potential for inventory, which is maybe owned or not even fully owned. Can a new retail business, a new business owner doing retail find money anywhere?
Emma, you look like you're shaking your head. You want to answer that first?
Yeah. Yes.
Great.
I mean, I think you can find money in a lot of places. if you're looking for loans, depending on the retail business and what it does for community development, I think I won't speak for the other organizations on here, but I would say that credit unions or CDFIs are a good place to turn to if you feel like your business isn't bankable at the moment. It just all depends on what exactly the nature of your business is. But we would be more than willing to have a conversation with you and hear more about your business.
Yeah, I think to add on to Emma and then also echo what Laz was talking about before, I think so long as you can demonstrate that you have a real grasp of your business and you know what you want to use your funds for in particular, VCLF at least would feel comfortable working with a new business or even a startup.
Okay.
Abby, you want to chime in on that?
Yeah.
Thanks.
So Community Capital would be more than happy to discuss things with you too. We regularly, as I said at the beginning, our main clients really are startups. So that isn't scary to us at all. But as everyone's been speaking of, just really know your numbers and know what your clients, who your clients are, how you're going to sell. And then depending on how much, there's always the collateral discussion. So, and that might be a little bit harder with retail, especially if you're not owning outright the retail, but also what the product is you're selling. Sometimes it really isn't worth it all, anything towards collateral. But yeah, because we can be more creative with that requirement, and then open to startups, and because we work with so many startups, we understand them, and we know the questions, and we can help you through that process very well.
Okay, well, I asked this question because I started a natural food store in this area many years ago. The lending was completely different then, of course, but we were faced with the response that you don't own anything. Your inventory is a lot of it is perishable, and you have no experience, and your numbers are projections. Come back when you have a profit. But that doesn't help me get started. I mean, I'm a volunteer now with SCORE. I'm not starting a business, but that was my experience. So I'm just trying to find out how it has improved, hopefully.
Pete, I'll add some of the projects I've seen in at least the last 2 years have crowdsourcing funding going on, private equity being raised through different events that are being held through those, with the entrepreneurs going out and seeking out the private equity. But you're right, it is a world that I think that all, to echo some of the statements I'm hearing, we're all similar in nature. We do want to understand. I mean, if we go down to the 5 C's of lending, and you take a look at our capacity, our collateral, and yeah, we're going to go through the motions. The credit union takes risks on some of the micro funding that we disseminate out, but mostly it's the capacity to pay back. And yes, if there's some inventory there, or there's a creative way of patching together some collateralized assets on the personal side, we'll see if we can work those creative ways. That did not exist years ago, where I'm doing that a lot more today and really branching out and looking at different ways to seek out. Is there a co-borrow? Is there investors that could come in and pledge a certain amount of cash equity through CDs and pledging them as backed as assets, supporting a local entrepreneur? There's creative ways. Unfortunately, and in my world, I would love to be a private equity person and just lend as I hear with a heartbeat, but it doesn't work that way. We do have to, the funds, especially in the credit union, and our focus is, these are deposits that we have to lend out responsibly on. So we do have to make sure that we are collateralized appropriately, and that's the hard part for many of the new entrepreneurs entering the space. So I always encourage folks to reach out to family, reach out to friends. Technology today is allowing many different communities to come together, ecosystems and things like that, to reach and find those other sources as opposed to just going to traditional lending. But that's my input on that. Crowdsourcing is something I've seen, input from other sources, family, and creative ways to put projects together. So.
Sure. Thank you.
I have an additional question on financial forecasting. Whenever we're done addressing, no, looks like we're done addressing Pete's question. So in financial forecasting for a startup, I understand there's a lot of variables. That said, at some point in this conversation, the lenders had mentioned that you can go through comparables and you have the tools and resources to be able to do that. Is there any institution on our side of the fence or a particular website that we can go to that has such information where we can, it would also be a fantastic tool to resource whether they're legitimate, whether excuse me, I'll keep it in my terms, whether my forecasts are accurate. Could anyone speak to that? Okay, it's the first time I've been scared in the seminar. Everyone's thinking.
Anyone like to jump in with a response?
Lad's is stoic, Ben seems pensive, everyone else I got a blank face.
Well, I can tell you when I'm working with people on their business plans, which is from my experience with all the organizations say they're looking for a business plan. And of course, projections are part of that business plan. That question always comes up, right? So how do we accurately forecast this? And so I think that there's some tactics to take. I don't think you're necessarily going to get, you can go to, there's a guarantee with any of them, but you depending on the field you're in, there might be a lot of information out there, especially if it's, say, a popular industry like the restaurant industry. There's different associations. Ideally, and hopefully the person has a lot of experience in that field already that they can kind of draw on, but also I've had clients reach out to other businesses to learn that information, go through some associations that some were helpful, some were not. And I think also with projections, and correct me if I'm wrong on this, but I generally try to take a very, very conservative approach with them. And I think that having a mindset around your projections is also part of the process. So even if you think you can do better in real life, you're better off, I believe, and it's the tack that I take, is to show that your business can make it with far fewer sales. So far better to be, relieved that things are going well than project too high and have to backtrack and scramble. So I don't know if that answers your question 100%, Marty. I haven't found in my time doing this that there's a one-stop shop place for that kind of information for every kind of business. But if Laz, Abby, Ben, or Emma want to jump in with some thoughts, or perhaps others want to jump in with some thoughts, please feel free to do so.
Marty, I'll just chime in and say I don't know of a one-stop shop just yet. From a web-based website approach where you can get all that you need and all that encompasses. I have yet to meet anyone who has actually found it as well. So probably word to all of us is maybe put it together, right, one day. But the idea is I think we've mentioned, quite a few of us mentioned some of the sources that that we go to, some of our community advisors, and they've done a great job. And so it looks like it's so far it's been pieced together through different sourcing, but not one stop shop just yet. But I'll keep you in mind, Marty, if it comes up. You're the first.
Thank you. Yeah, after just digesting the conversation, it seems like this is the essence of the challenge that we face as to why we're here. And these are the nuances that are worked out with each individual lender. So,
Sure, putting things together like this is a great way to bring many people together. So here's a great way that years ago wasn't even in existence. So, so we're growing and developing, right? Thank you.
very good. Thank you.
I just wanted to contribute one thing.
Yeah, go ahead.
Or there was a funny noise. Is that cool?
Yeah.
I've had the amazing experience of being able to work with Simeon on my business plan and my numbers and things. And it's changed numerous times, but it's been like this experience of just like really exploring what my business is and like working, like doing the stuff myself, but then working with somebody else just helped me create this whole different perspective. So I feel like there's a lot of value in calling somebody in to help you with it.
Thank you, Callie. I didn't plant her. She wasn't a plant. But thank you.
I just want to add that there are a lot of industry-focused networks and organizations in Vermont. So I think that along with the business advisor, but also getting connected with those networks that depending on what you're starting, most likely you'll be able to find one. So, and a lot of those organizations are there to share their information with others in the industry. So, so that would be a great resource for anyone starting out or in business now. Go out and look because they're there.
Yeah, I'll echo what Abby's saying. I'm having a hard time actually thinking of these specific articles I've seen, but I do know that there are some of the regional Federal Reserve banks, and coming to mind right now for some reason is St. Louis and Atlanta. They'll sometimes publish these interesting reports that will actually touch on, maybe it's the state of small businesses in a particular region, or kind of touching on, I was reading an unemployment one from, I think it was St. Louis one recently that was it was specific to them, but it resonated a lot with, I think, some of the staffing issues that businesses throughout Vermont have been facing for, I guess, a year now or so. So I don't have specific websites or locations for you to go look, but exploring some of those websites, they might have some interesting papers or sets of data that might be useful for at least coming up with a little bit of a baseline for what your expected growth rate should be. But again, kind of echoing what I think we've all said, every business is going to be different, and so being able to kind of project your own or to come up with your own projections is it's going to be unique to your business depending on where in the state you are or what particular industry you're in. But again, it's also a great way to kind of develop a much better understanding of your own business. And it just kind of makes you think about things that you might have previously breezed over. Like, since we're all just using restaurants as an example right now, ways to increase the number of maybe alcoholic beverages that you're selling in a given day or something like that. It just kind of makes you take a different perspective on certain aspects of your business that you might have kind of breezed over previously. So it's always a great process, I think, for individuals to kind of work on and flush out either by themselves or with an advisor or something like that.
Great. Thank you so much. Are there other questions that folks have, or I can turn to the list of questions that people submitted when they registered? But I want to first give the floor to anyone that has a question. Nope. Okay. Go into the bag of tricks. Let's see here. Question that came up was when setting up a line of credit, should you take as much as they offer, or are there reasons to only set up a certain amount? Anybody care to take that first?
When I think of a line of credit, it should be thought of as short-term financing, a year or less. One of the things challenges that I've seen many folks over the years have gotten into is thinking of a line of credit to be used as, well, I'll just use it to purchase this and well, I'll pay a bill of that and keep it going. And what happens is a balance starts to build up. And at the end of that year, that line of credit now really becomes a term loan because the ability to pay back is, been impeded, cash flow, the idea of building up debt, the idea of well, I'll be able to pay it back. So those are, when I think of a line of credit, I think of, do you have any short-term financing or seasonal flows that are occurring, whether you're in the business of point of sale or receivables, but any of those ebbs and flows that where you could use the line of credit to fund yourself during that period of time, during a calendar of 12 months. And the ability to pay it back is just as important. So I know that institutions historically, some of the large institutions have a tendency of sending out marketing materials to folks offering lines of credit of 10,000, 25,000, 50,000, whatever it may be. And we get tempted by those amounts and say, well, I guess I'll use it as a rainy day. But what happens is that's debt that's going to be counted against you in some way. It's going to affect your cash flow. It's going to be looked at. So a line of credit is, when I think of is, well, I'm going to buy this piece of equipment now. I'm just going to make a quick decision and then I'm going to turn this into a term loan because I really wanted to make payments over 5 years, but I'm going to make a quick decision and use my line of credit. These are, again, short-term decisions, short-term funding, and the idea is, do you have the ability to pay it back? So historically, I used to answer that question differently and said, well, if you're being offered a line of credit and you have it, it's great to have. Well, not necessarily. It has to be used responsibly. And then when you're asking for one, think of yourself as saying, I'm going to the lender because I have a short-term need. I'm a seasonal business, and during the winter season, I perform very well, but during the spring and summer, I don't. I may need a line of credit to fund operations. Well, we'll take a look at your seasons and say, well, look, during the fourth quarter, this individual performs very well. They have the capacity, they have the ability to pay this back. So short-term financing or line of credits, not long-term, anything more than a year, should be really looked at as a term loan. And that's my response to lines of credits. Thank you.
Thanks, Les. Abby?
My dog's gonna bark because the train's going by, sorry. So two additional things. Just accepting the largest amount. When a lender is looking for additional debt, we're going to look at the total amount of your line of credit, regardless of how much you've taken out, because there's a potential of all that debt. So if you need a $5,000 line of credit, but you have a $25,000 line of credit, we're going to look at it as you have $25,000 worth of possible debt, which is going to make us a little more wary about adding to that debt. So so that would be a reason not to take the max amount. But we always go back to cash flow projections. Those are really great tools to understand what your actual need is. And then just for community capital, the way that our line of credit is set up, it's a 12-month revolving line of credit. So we require that you pay it down to zero and keep it at zero for at least 30 days in order to renew at the end of that 12 months. So we're slightly micromanaging to make sure that you're using that line of credit as a line of credit, not as a long-term loan that you're just going to keep this debt out there for who knows how long, because month to month we're only requiring that you pay interest, which is great, again, with those seasonals, really the people who use our line of credit the most are like chocolate manufacturers or a pottery company, and their big season is around Christmas, so they take it all out now or the last few months. They have an amazing Christmas season and pay it off in January in order to be able to renew. So so some of those lines of credit are set up to make sure that you're using it as a tool the correct way. But yeah, just look at your cash flows, see what you really need, and don't get too over indebted, because it is very easy to just take. And that kind of jumps into their like Square, and there's other online lenders that have those services out there that are really easy to access cash. But we've seen it many times. We are able, our community capital is able to refinance debt. It just gets away from you because it's so easily accessible. So having a limit on how much you can actually take might just help you in the long run to not all of a sudden be $75,000 in debt, yet your yearly income is at $50,000, and I mean it can get really intimidating very quickly.
Thank you, Abby. Emma, Ben, want to chime in on this?
I can chime in. Our line of credit is set up exactly the same as what Abby mentioned. It's on a 12-month.
Sorry, Emma, can you speak up? We're having that issue with you again. Sorry.
Can you hear me?
That's better.
Okay. I was just echoing Abby in that our line of credit product that's available is on a 12-month revolving term that can be renewed every year as long as you rest it for 30 days at zero. Sometimes folks will come to us with a request, and they're requesting a term loan, and we actually decide that a line of credit would be more appropriate for what they're asking for, and vice versa. If someone's asking for a line of credit, but they're really purchasing a one-time piece of equipment, that's more appropriate for a term loan. So I think the question really is, look at what your business needs, and there are different products that are compatible with that. But if you do have a line of credit available to you, as Abby said, the most important thing is to just really manage your cash flow and really only draw on it for the specific reason that you got it.
Yeah, generally speaking, taking on additional debt that you might not need is probably not the best route to go down. And the need doesn't have to be super specific, like I am going to buy this piece of equipment. It could be kind of what Laz was talking about before, where there's some seasonality to your business, and it might just need it to hold you over during certain time periods. I saw something recently that said your average small business only has about 20 or so days of working capital saved up, or basically, if you stop making money today, your business could basically survive for about another 20 days. So there are definitely, it doesn't have to be, you don't have to take on a line of credit with the idea of using it right away or using it exclusively for one thing specifically, but having a good idea of what you'll need it for, and not taking on too much debt, because it will end up coming back around, sort of thing, is always kind of the preferred methodology to take, I guess.
Thank you, Ben.
And I'm sorry, 30 seconds.
Yeah.
On Abby and Emma talking about product specific, we work the same way in terms of how the line of credit works. And for the audience, if you were wondering how most institutions work, they work the same way. Most of my experience in working with lines of credits with other institutions have a 30-day resting period, interest only. The idea, again, is to remember the use of it. and understand how the lender's looking at you when you're coming in with your application is does the individual or the group, the entity, understand why they need a line of credit? That's the most important piece, the aptitude, the depth of understanding why. That's one of the first questions I always think about. But thanks to the group to remind me about the product specific around that.
Thanks, Laz. Excuse me. So it's 11:22. We're scheduled to go to 11:30. If anybody has any specific questions, please, either raise your hand or post them in the chat. I guess one perhaps obvious question, but I think it's worth asking is, in terms of an application, you touched on that folks need to put in projections with an application, but what else do you expect an applicant to provide when they are seeking funding from you?
Well, I'll go right down the list. I'll be public about it as if anybody called me on the phone and said, what do I need?
Yeah,
So
great.
whether it's $1,000 or $500,000, and again, case by case, it always comes down to the general request is an application, personal financial statement, tax returns, because we're going to look at the individual personally as well, or the individuals. Anyone that has a percentage of 20% more of the business are going to be looked at. So if there's joint applicants, whatever it is, we need specific personal financial statements from each of those individuals. 4506T, just a little government form just saying, hey, we can pull returns if we need to do it, small audit, but that. And then in terms of a business plan, 3 years projections, if there is equipment involved, be very specific with your equipment lists. What else can I talk about? That's just the basics. Then if you start to get into case by case, then I'll get more specific with the individual and say, well, can you provide different types of information depending on what it is? But it really comes down to always having your personal tax returns, at least 3 years, business tax returns, if you're an existing business, 3 years, making sure that you have your, articles of organization, are you already have a bank account if you're new? I mean, it depends on what stage you're at. So some of those questions will come out in the initial stage, but I always start with the application, personal financial statement, 4506, projections, and a business plan. And if we're buying an existing business, then it gets very specific is, well, does the business have financials that they can provide? If so, well, we'd like to take a look at their historic financials as well. So again, case by case, and be happy to take any calls on that anytime. Thank you.
Thanks, Les. That's a great answer. Abby, Ben?
Yeah, so for Vermont Community Loan Fund, it's a pretty similar set of documents. Obviously, we'll need the application itself, a completed business plan. We don't necessarily need like the traditional business plan that I'm sure there are plenty of templates out there for, which can be a little bit exhaustive. Really, we're looking for in that business plan, you kind of describing what your expected use of funds are, talking about whatever products or services you offer, target audience for your business, maybe giving us a brief description of competitors, and like Laz kind of just mentioned, talking about any individuals that are particularly important in the business itself, but we're really also focusing on hearing about anybody who has more than a 20% equity stake in your business. Personal tax returns. So again, that's also probably going to be the last 3 years. And we're really looking for probably your IRS form 1040. And then if you are not a new business and you've been self-employed and you've been paying yourself, we'll probably also need your Schedule 1 and your Schedule 2, which kind of talks about self-employment wages and taxes. And then any Vermont state income taxes documents, which I think is like the 111 or something like that. Also, we'll need up to 3 years of your business tax returns. So if you're a single member LLC or sole proprietor, that's probably just your Schedule C. a balance sheet, a profit and loss statement, which are both pretty similar. And again, that's something we're happy to, our business advisors are happy to help you put together. Any accounts receivable or accounts payable statements that you may have, which are just, it's another form of a asset or a liability. And then those projections that we had previously talked about that should go out at least a year.
Thank you, Ben. Abby?
So community capital, it's pretty similar, except it's 2 years of personal taxes, 2 years or as far back as you go for your business if you're either new or don't have that history. But that's for anything 5,000 and above. We do have a smaller, slightly expedited product. It's any loans 5,000 or below. We're not going to require a full business plan. I like a well-developed cover letter explaining your business, explaining your need, those type of things, but we don't need a complete business plan. We're only going to need 1 year of cash flow projections, and then 1 year of taxes. And then for that smaller loan size, we ask for 3 months of bank statements from you and your business if it's existing. And again, it's the same as everyone else with anyone who owns 20% or more. That's that requirement. And then just to answer Margaret's question from the chat, you can digitally send it in or you can mail it in. Either way is easy. Digital tends to be a lot easier because then we're all kind of working hybrid weird schedules, then it's a lot more accessible and I will get it quicker. But whatever works best for you will work for us. Also, just to mention, on our website, our application is on there. It's a fillable PDF. The first 2 pages of that application is just a checklist of everything you need when you're submitting an application. So it's pretty clear. And just to be totally honest, that's really the biggest obstacle when I'm starting to work with a client is that they haven't submitted every single thing on that checklist. And I have to go back and forth simply to get those things that are already listed. So so look at that and make sure that you've gone through it. And if you have any questions, always happy to answer any specifics as you're working through it.
Thank you, Abby. I appreciate that. I'd just like to chime in for a moment with regarding the business plans and business planning. It's been a term that's been used a lot throughout our discussion today and in the answers. For some of you, you might not be familiar with the business plan, but in terms of setting expectations, you know that a lot of the business development providers in our area, microbusiness, as well as SCORE, SBDC, Center for Women in Enterprise, CEDO, if you are in the Burlington area, can also help with a business plan. I think it's important to realize that that's its own separate part of the process. And as someone who's helped a lot of folks develop business plans over time, that's very much for a lot of businesses and especially startups who are new, that can take quite a while to put together because it's very much a learning experience. You're learning as you go. You're learning about specific business issues and in general, and then how they're going to relate to your business specifically. So it's important, I think, to realize that you need to allow time for that to happen. If you're very experienced with it and you can do a lot of the work yourself, you can certainly pull it together fairly quickly. But from my experience, most people tend to take a minimum of 3 months to do that. And that's with assistance. So I just mentioned that. So if you're going to a service provider, that you can check with them if they can assist you with that, but also that you plan accordingly. So So you don't want to go for the loan next week and think and realize you have to pull your business plan together in less than a week, because in some instances, I suppose it can happen, but not from my experience, generally speaking. So just allow enough time. I'd like to point out that it's 11:32, and I think we're going to wrap up here today. Rachel, would you mind pulling up the sheet that we started our conversation with today? I know we didn't get to all of the, thank you. I know we didn't get to all of the questions that were on the list, but I think we covered a lot of great information today. And I think, as everyone can tell, your particular situation matters in terms of what will be needed, what will be required, and what will need to be considered. So I'd like to encourage you to follow up with any of these folks from these organizations, which are listed on the screen in front of you. And I would especially like to thank Laz, Abby, Emma, and Ben for taking the time today to discuss this topic. And it's one that's been coming up more and more and more. And it's really nice to be able to kind of have this conversation once again, as it's kind of been put on hold for the last few years with COVID and everything. So thank you so much to everyone. Thank you for everyone for joining today. And the information that will be emailed to you that's on the screen. And Rachel, would you mind just going down to the bottom to the list of service providers, please? Thank you. So here's a list of other business development services that you can tap into. We're listed on the top of this, so you can certainly connect with a micro business in your area, but you can see here CEDO, Center for Women Enterprise, Mercy Connection, SCORE, SBDC, and the Small Business Administration. So feel free to reach out to these folks. All of them are wonderful and have a real interest in helping develop businesses in our community. So once again, thank you everyone for attending today. If you have any questions, feel free to email myself or Rachel. So thank you again.
Thanks, everyone. Bye.